Good morning, everyone. This is Joanne from Succeed in Forex. Hope you had a great weekend and are ready for a great week in trading. Our news out of Switzerland this morning, the headlines are saying dollar looks heavy as investors are expecting a 25 to 50 basis points Fed cut by the end of January. The dollar dropped on Friday after a December report showing the weakest job growth since August of 2003. The Forex market was hit by fears of a recession and an increased expectation of an aggressive rate cut by the Federal Reserve at the end of this January. The jobless rate rose to 5%, the highest since November of 2005. And it was the third key U.S. economic indicator last week that was worse than the most pessimistic forecast. The euro-dollar traded at 147.43 on Friday, which was unchanged but below the 5-week high of 148.25 reached in the wake of the U.S. payrolls data. The dollar-yen was down at 108.60 after it rebounded from losses incurred after the jobs report from a low of 107.97. The dollar Swissy fell to a 11084 after hitting its Friday low of 11019. The pound dollar was unchanged at 197.36. Interest rates futures reflect more than a 66% chance that the Fed will lower its benchmark interest rate by 50 basis points later this month. Such a cut would bring the Fed funds down to 375, below all but 2 of the 10 most liquid currencies. A 25 basis point cut is believed a certainty. The dollar dropped sharply after data showed the Institute of Supply Management non-manufacturing index registered growth in December and was higher than expected. That contrasted with the manufacturing survey earlier last week, which reflected contraction. However, the dollar remained down on Friday, with the latest ISM data not enough to turn the tide of sentiment against it. The slowing U.S. economy generated only 18,000 jobs in December, with the private sector employment contracting for the first time since July of 2003. In contrast to those betting for rates cuts in the U.S., the European Central Bank appears more concerned about rising inflation than easing growth, suggesting that the rates will likely be left on hold at 4% for some time to come, especially after last week's data showed the Eurozone inflation well above the ECB's target in December. Investors grew skeptical about global growth prospects, with the U.S. economy possibly headed to recession. In profit-taking, they have diminished their carry trades and investments at risk in their portfolios. Last week, the dollar fell about 3.25% against the yen. This was the largest weekly decline in almost 2 months, and the euro was also down against the yen, the biggest weekly fall since mid-August. The sterling also was down against the yen, posting a weekly drop, also the highest since mid-August. Well, that is our news for today. We hope that this will help you in your trading. We would like to ask you to join us and check out our website at www.succeedinforex.com, and also join us and visit with us at our Yahoo forum, which is also Succeed in Forex. That is all for today. Hope you have a great trading day, and we will see you tomorrow.